Welcome to the Swing Trading with Cycles channel. We're going to do an update on the Dixie today, US dollar index. We'll try to keep this really quick. Take a look at the pinned comment if you haven't seen the previous video on the Dixie, and also just in general understanding cycles analysis, price action, etc. This is your daily chart. We talked about this in the last video. Look at that. These 3 days up, like this day here was your daily cycle low. And then you had a few days of follow through. And now we're just consolidating, right? We consolidated for 1, 2, 3. I tweeted about this. I think we may have talked about it in the previous video. We made this false breakdown below this line, and you can see we've come back below that line again. To me, that means that 102.962 area is going to be really important. That's the low from this candle here. That's your second day of follow through after this big green candle that was your daily cycle low. So what does that make? So that was your high on day 3, and we talked about how this consolidation was probably setting up for a higher high above here. So what day is today then? This is a Friday, again, February 17th. So that's day 4, 5, 6, 7, 8, 9, 10, 11. So you can see we have what looks like a reversal candle. This is a bearish candle. It's a shooter. It's the kind of candle that tends to, the next candle you would expect to have some follow through to the downside. As I always say, it's only a reversal candle when you actually get the reversal. Like this is an example, right? Like you can see upper wick closes red, you get follow through. Upper wick closes red, follow through. So we wouldn't be surprised to see that move down on Monday. And again, that 102.962 area is going to be really important to see if that holds. But we have a high on day 11. That's a changing character. Look at all this move down. We've had these little rallies. This was like a 4-day rally. This was like a 3-day rally, little 3-day rally, little 4-day rally. This is an 11-day rally from this point to this point so far. Even if we topped out here, this would still be the longest rally that we've had so far. But what does this mean for the weekly? And to be clear, I should have mentioned, the dollar has made a 3-year cycle high as of September. That's right here, week 17. We made now it's very clear that daily cycle low that we just talked about is also a weekly cycle low. You can see it's a big bullish outside candle, and this is the second week of follow through now. So this is a higher high than that, and that's a higher high than that. Now, tactically speaking, we're going to have an inside candle next week. We know that because of this candle, right? Like, look at this candle. Where is the Monday candle likely to open? Based on this, somewhere here. So we're going to start the week as an inside candle, and it's going to be a question: which side of the range do we find ourselves by the end of the week, right? Like, do we make a higher high, get above here, or make a lower low? So the high on this is 104.667. The low is 102.586. And this would be, next week would be week 4 of the weekly cycle. And we talk about this, how we expect this weekly cycle to be short. And so it wouldn't be surprising if this was our high on week 2. Or excuse me, actually next week is week 3, not week 4. It wouldn't be surprising if this was our high, although I'm expecting we probably get to like week 4 or 5, or 5 or 6 maybe even, just based on past cycles. You can see the other criteria is we're closing above the 10-week moving average. That's another sort of signal that we have a new weekly cycle for the dollar. Now, some people are saying, we're going to have a long weekly cycle. We're going to rally for 4 months. Let's see. There are a lot of people on Twitter that like to try to predict things. And then if we look at the monthly chart, just thinking about the big picture here, we talked about how this candle was on pace to become a bullish outside candle. And notice it's now pulled back. I mean, we can see the pullback today. But to complete the bullish outside candle pattern, we need to get above 105.631 because we made a lower low. And now we're trying to make a higher high above this candle. So we're going to watch for that. Even if we were able to trigger that pattern, though, that does not preclude this from being a bearish move. Something like this. We could even come all the way up here and then still make a lower low, which is my expectation. We are declining into the 3-year cycle low, which we wouldn't expect to get until early next year. So I expect all of 2023 to be difficult for the Dixie. You can consider these bear market rallies. It's going to be a good opportunity to short as this thing forms a swing high, if and when it does. I'm obviously open to the possibility that it doesn't form a swing high and we just keep running. UUP is a vehicle one could use. It's what I'm using. It tracks the Dixie. It's not leveraged or anything. It just tracks the Dixie. And you can see this is your monthly chart on UUP. The bullish outside candle level for that would be 28.33. And so you can play like 28 calls, for instance, strike calls as an example. So we'll be watching this again. And just thinking about sort of long term, I could see UP getting down to $26.34. Again, probably have some more upside from here before a drop down. So it will be a really amazing opportunity to position short. And so that is the update on the Dixie. I will also say that yields are starting to move higher. So the Dixie is moving higher and so are yields. And so it really begs the question, is this a false move from yields as well, just as the dollar is probably having a bear market rally? So this is your 30-year yield. This is the yield, not the price. So as this goes higher, as the yield goes higher, the price actually goes lower. And you can see we made this double bottom situation here. This is a higher low, and now we've just kind of rallied. We're getting the same looking candle like we do for the Dixie. It's not surprising. Again, they're rallying together, right? The yields and the Dixie. So as the Dixie goes up, yields are going up. And so we'll see if this candle completes the bearish outside candle pattern. That would be making a move below this candle's low here at 3.82%. So we're gonna be watching that. That's your 30-year, and your 10-year is showing the same pattern. So it's all same pattern, different levels. So for the 10-year, bearish outside candle activates at 3.768%. So we'll see if we get there. That is a move to watch. Again, Dixie is in a new weekly cycle, likely to be a bearish one. That's the update on Dixie. We'll leave it at that. Thanks for watching.